Yo, what's going on? Today we're just gonna be talking about the market maker model. I'm gonna get straight to the point. But before I start, okay, so I'm gonna get straight to the point, and there's like a before I start, I kind of want to say like, okay, am I bad for like not really uploading much on YouTube? I'm more consistent on TikTok. If you guys actually fuck with me and you want to see more of my content, just check my TikTok out. I've just been kind of locked in on just trading and just everything in general, right? So I actually have nothing set up beforehand to kind of like no examples beforehand to kind of just explain. But one thing I remember is the daily had this. Okay, so one thing you'll see is the market maker model. Okay, wait, actually, before we continue, before I show you an example, let me just go for the beginners just to show you guys exactly what the market maker model is. So the market maker model is kind of okay. The simplest way I can explain it without kind of getting too technical at the start is just remember it as like it's kind of like a pattern, right? It's not really a pattern, but it kind of looks like something like this, right? So you'll see this move down, take out internal, and I'll just let me fix this up later. And then sometimes it goes like this, right? Oops, what the heck just happened there? Right, so something like this, right? Now, the way that it works is, first of all, there's an accumulation phase right there. Sometimes we make like a relative equal highs or whatnot. So let's say that these are the relative equal highs. So right here, we just kind of generated a bunch of buy side liquidity, and this is for market maker buy model. So right here, we just generated a bunch of buy side liquidity, accumulated. Then we manipulated past it. So let me just kind of make this look pretty for you guys. Then we manipulated past it. Right here, this is the manipulation zone. Then we had a little bit of a distribution downwards. This is the distribution, right? This is the distribution, and we manipulate it down to a liquidity sweep, or like a zone of liquidity, or even a high time frame PD array, right? It doesn't have to be technically liquidity. It could just be some sort of high time frame PD array, right? And now this is technically it, and then it just goes up, and we take out the liquidity that we just kind of generated over here, and over here there'd be a bunch of resting liquidity as well. So it's not just like straight down move. There's like a bunch of spikes up and down or whatever. I'll try to find an example. So the people that already know this, you guys could tell that a lot of the time there's not a high win rate, right? And that's because there's some stuff that you guys are missing out on. So one thing that makes a market maker model A plus is we first of all we have to take out a high time frame liquidity, right? Or go into a high time for PD array. Me personally, I trade a collection of the two. So I like to see a liquidity sweep mostly. Like I look for a liquidity sweep. If it's within a high time for PD array as well, that increases my chances of like kind of trading it. And if we have a if we have a kind of like if we go into a high time for PD array, I don't usually trust it as much as a liquidity sweep. Now, one thing you guys also want to see is kind of an SMT and an internal sweep as well. So let's say this is the higher time frame sweep, or right here. Let's say this is the higher time frame sweep. One thing that might happen a lot is we kind of take out the liquidity, just like internally sweep it, and then form an SMT with the correlating pair. So if you see this in itself, this kind of increases the win rate as well, right? So we have an internal sweep and then a SMT. This kind of increases the win rate for it to reach up to there. And also this accumulation, we want to see relative equal highs that are taken out. So in here, I already gave you guys an example with the relative equal highs. Sometimes you might not see it. Sometimes it's just like accumulation, but when they're relatively equal, it also increases the win rate. Now, I'm kind of going to get a little more advanced right here. Here's actually a good example on a daily. Yeah, I was right. Right here, again, boom. This is, let me first mark out the actual market maker model move. This is somewhat the market maker model move. Okay, this is like right here. This is the market maker model move. As you can see, you could compare it to that, right? And this happens a lot. I didn't even like look at this to come up with this. This actually happens a lot, and it happens on every single time frame. So this is on a daily. If you go into the 15 minutes, I bet today we would see something similar, or today was kind of volatile. I don't know. We'll scroll. So you'll see somewhere like sometimes it's like even internal, right? So I don't know. Let me try to find an example. Like something like this kind of is a market maker model. It's considered once the accumulation, we go into a higher time frame PD array, manipulate, right? You'll always see this, right? I right now my eyes is just bad, but you'll always see a market maker model, and it's all fractal too. Okay, whatever, bun that. But it's all fractal too. So whenever you see a higher time frame market maker model, you can find entries on a lower time frame. So right here, what we see is these two highs, they're relatively equal, and you could just mark that out right there. Now we come down and we manipulate past these lows, right here. Like this is a sweep, this is a sweep right there, right? I don't know if there's an SMT here. I'm too lazy to check. And let's see if we came into a higher time frame PD array. Let's check the monthly. Depends if there is a volume imbalance. I mean, first of all, we came into this one right here, so I guess you could say we dropped into this fair value gap right there. And yeah, it's like the monthly fair value gap. Let's check the weekly again. Yeah, there's nothing really too important. So if we hop back onto the daily, one thing that I always do with the market maker models, let me just check how I'm doing on time. One thing I always do with the market maker models is I go from the relative equal highs, that or like the highest part of the relative equal highs, to the manipulation, and I do this, right? So let me show you what this is. So right here, what I like to see after the manipulation is I like to see a kind of a retracement to the 50%. Sometimes I like to see it break structure, or here's what's gonna happen. In this case, it didn't happen, but sometimes what happens is we break structure above the 50% zone, and then we kind of go up a bit, and then we manipulate down. So we have the what's called the first or the second stage reaccumulation. So we go up, we reaccumulate. We have the first stage. We have a move upwards past the 50% zone, and we have a second stage reaccumulation in between the 50% and the 25%, and then that's when we have a reaction up, and then we kind of just start zigzagging up, and we go up to these highs right there, right? We go up to the relative equal highs. But one thing that a lot of traders don't know about, and this is just the gatekept sauce for probably the maximum 100 people watching this, what will happen is you can mark out a quarter above the what's called the relative equal highs in the manipulation, and as you can see, this is the maximum that we would reach in a market maker model before kind of retracing or like reversing. So this again happens on every single time frame. In this case, I'm on a daily, and as you can see, we move up, and I actually called this out on one of my TikTok videos. I said this will be the maximum that we will reach. Look, we hit that, we kind of manipulate it. We have an internal sweep right there. We come down, boom, a change of state in delivery on the daily, and I can probably assume that we might start dumping a little more. You can use standard deviation to kind of figure out how far we would go down, but I'm not expecting like us to take out all of this, but maybe somewhere around the 21,000 zone, somewhere around here, we're going to manipulate down to before continuing back up. So over here, but let me give you guys an entry model. So whenever you see here, there's not actually there's no good entry on this example, but I'll try to figure something out. As soon as we kind of break out the 50% zone, and you could think of this as breaking out of the 50% zone because we don't have a proper example here. What would happen is we begin to retrace, and then it kind of goes up. This is the first stage reaccumulation. It goes up, and then it's gonna come into a PD array between the 50% and the 25%, right? It could be a fair value gap. It could be whatever, actually, an order block. But in this case, let's look at this fair value gap. This fair value gap right here, you want to enter off of the first PD array once it actually touches into this quarters right here, right? This quarter right here, the 25 to 50, and you want to enter off the first PD array. So you could enter longs right there. You could have entered longs right there to the 125. Now, I don't know. Let me try to find a better example. This is not too great. Here, wait. Let me pause the video real quick, and then I'll actually find like a A+ example, and I'll get back to you guys. Okay, so literally I just scrolled on NASDAQ for like a minute. This literally happened on Monday, 11th August 2025. It's not even that long ago. I was just kind of scrolling a little. And here's the thing. So boom, you see that there's relative equal highs right there. And this can also be considered relatively equal, right? You'll sometimes see ICT marking something out like this as relatively equal. So we see the accumulation right there, the manipulation down to, this leg right there. There's a liquidity sweep, whatever, right? And then we kind of go up, we break structure above, like we kind of break up above this. So first we come here, first stage reaccumulation. You could enter right here, and like the better you get at spotting the market maker model, you could enter right there. But as you can see, we kind of broke up above the 50% zone, and we had a second stage reaccumulation that came into this area right there, right? So now you can enter off the first PD array, and it's fractal, so we could just look at the 15-minute or even the 1 minute or whatever, right? What the heck, where did it go? See, like the 15-minute, we kind of came into this fair value gap right there, this fair value gap right there. One thing I want to kind of mention is whenever you see two fair value gaps like this, it's better to enter on the lower one, and I'll tell you why right now. Is because this is too much in premium, right? So this range in itself is price leg. If you mark out this price leg right here, from there to there, this is in premium. They're both in premium actually, but this one's too much in premium. So whenever you see two fair value gaps like this, you can technically mark it out like that, because you can think of it as a 30-minute fair value gap, right? Rather than, and I don't know why that's there. Let's bring that there. You could technically look at this as a 30-minute fair value gap, and I just kind of want to. This is like for my sake. I want to see something. If I mark out this. Okay, wait, I'm just kind of curious about something. No, it's not the 75. Let me try one more thing. And you should experiment stuff like this as well. Okay, no, this is 100% on the OT. But yeah, as you can see, this technically is, if I look on the 30 minutes, you'll see it. This technically is a 30-minute fair value gap that we had a retracement into, and you could have longed off of this. Put your stops at that low right there, and as you can see, there was a little bit of a kickback, but look at this. Look at the 125 I told you guys about. We kind of went up there. Probably there's like some sort of liquidity zone up there before, like something like that. Maybe we swept that. Yeah, exactly. See, this high kind of matches with that 125, and then there was a retracement lower. It wasn't too much, but it's a lot. It's still a lot. You could have probably like top tick something like this, right? Sometimes I do that whenever I see a market maker model, and then the 125 or 1.25 aligns with, like, I don't know, like a sweep like this. You can kind of see like there's a higher chance of it just dropping off the get go, right? You could, I don't know, again, use standard deviation to figure out where it's gonna go down to. Okay, so this was kind of a long video, 13 minutes. Okay, that's not even that long, but I don't know. I like to keep my videos a little shorter and a little more entertaining. I'm not gooning or anything like I used to, but it's one of those things where it's like I kind of just want to lock in for you guys for this video. If you did enjoy this video and you found any sort of value in it, I would appreciate if you guys followed or subscribed. If you guys want to see my TikToks where I kind of talk about stuff like this, it will be linked in the description. Okay, and I also have a free Discord community where we just kind of trade, we talk, we teach each other stuff. That'll also be linked in the description. So let me actually just show you. So my thing right now is just loading. Just give it some time. Let's just see how patient you guys are. All right. So we go here. As you can see, like, okay, sometimes the conversations are not about trading whatsoever, but I don't know. That's one thing I like about the server. It's more of a community rather than, did they mention me or something? Oh no, it's more of a community than like, only trading. It's kind of fun to just hang around here with the guys, talk, or whatever. But yeah. If you guys did enjoy this video, again, smash. I'm a freaking Smurf. Smash that subscribe button.